What's going on, everybody? I wanted to talk about the major stock market sell-off happening right now, what the implications are, what it actually means, and how it's going to impact either you, your future, your investments, or just your purchasing. And so let's kind of get into this real quick. I don't have the ability to share my screen. I'm not that advanced on YouTube or tech or anything yet to do that. And when I try it on my other computer, everything comes back super blurry, so it's kind of pointless for y'all. You can't see me or what I'm trying to show you. So I'm going to read. This is a CNBC article. I'll put the link inside the description. It says sell-off on Wall Street gains steam with the Dow falling more than 500 points. And it says U.S. stocks fell Wednesday after another major retailer warned of rising cost pressures, confirming fears over inflation that have sent major benchmarks to big losses so far this year. The Dow shed 530 points. The S&P 500 1.9% and the NASDAQ composite 1.9%. Now, at this exact time, I don't actually have those right this second. I will look at those at the end of the video with what the Dow and everybody's at right this moment. But it says basically these losses came after earnings report from Target, where the shares tumbled more than 23%. That is huge for somebody like Target. That's massive. It says reported first quarter earnings that were much lower than Wall Street estimated because of higher costs for fuel and compensation. So with the raising of wages and the raising of fuel prices, that ate into the margins that Target has. Target likely has, like similar to Walmart, they're a high volume, low margin retailer. And this is basically saying that they probably are going to have to start raising their prices. Which is maybe something they hold out on. I mean, I don't know if you've seen the thing from the Costco CEO a while back, but basically, they priced their rotisserie chickens at, a certain price to drive people in that they lose. I think he said like $40 million a year on that, but because they get people, it's like free marketing, right? They get people in there, the people spend, $100 that they wouldn't have spent otherwise to get the $4 chicken, the loss on the chicken, right? I mean, they take the loss on the chicken because they're going to make it up on the other items that people end up purchasing when they walk into a store. Like, I'm here, I might as well just grab broccoli and this and that and other, right? So basically, it said the retailer also saw lower than expected sales for discretionary merchandise like TVs. It said any company that relies on household and discretionary purchases will likely suffer this quarter because of a lot of discretionary income has been funneled into food and energy prices. Discretionary meaning, well, I mean, we can do without a TV, right? It's not like it's kind of an optional purchase, right? So you don't necessarily have to have makeup. If, you're choosing between makeup and food, you're going to choose food. Same thing with, clothing. Things like that. I mean, I wear pretty much white t-shirts from Hanes all the time. That's pretty much it. Like, I have 3 kids and they stain my clothes all the time, and I don't like my nice stuff getting stained. So I just wear these plain white t-shirts that are like $12 or something for like a pack of 6, like $2 a shirt, and I can get them all messed up. Never have to worry about it. I never feel bad about it because it's not my nice clothes that are getting dirty. Basically, people will choose either not to spend money on nice designer stuff in lieu of food, or maybe make cheaper alternative choices, generic products, and things like that. So back to the article, it says other retailers took a hit on the back of Target's quarterly miss because Walmart missed earlier as well, I believe the day before, or I think it was sometime this week. Walmart missed, and their shares also dropped by over 10%. But basically, it said the Best Buy stock dropped more than 10%. That's electronics. If you're choosing between food and gas and getting a new pair of headphones, or a video game, you're probably going to choose food and gas because you have to use gas to get to work, and you need food to eat and live. So Dollar General fell more than 10%. Dollar Tree, those two, even though they are low cost item places, if they're not selling food, people tend to choose not to go in there to get bouncy balls necessarily, right? And shares of Macy's dropped while shares of Kohl's fell more than 9%. Macy's dropped 11%, Kohl's 9%. I would expect it, honestly, those two, Macy's and Kohl's, to drop a lot more than 9 to 12%. I would have expected them to kind of align with Target and drop over 20%. I could see the argument for Dollar General and Dollar Tree. They both do have a refrigerated section. They do sell foods, but they sell such cheap items. I would kind of expected more people go there as an alternative to buying at either Target or Walmart to pick up those cheaper things that maybe are not offered or maybe offered at a cheaper price there. So I would have expected the volume Dollar General and Dollar Trees to be better, and I would have not expected them to fall more than Macy's and Kohl's, because, I mean, I don't even know who shops at those places anymore. I mean, the only time I go to Kohl's is a return an Amazon thing. It's an interesting one for me, but we'll see. Maybe when their earnings come out, maybe there's something I don't know about them. It says Lowe's shares also fell more than 3% after missing expectations in the first quarter as shoppers bought fewer supplies for outdoor projects. This is outdoor season. I know I just remulched my house, so I went and actually contributed to Lowe's. Actually, you know what? I did not contribute to Lowe's. I contributed to Home Depot because they're the ones that had what I wanted on sale. And I know Home Depot's actually stock went up this week with earnings, or last week with earnings. So I'm curious as to why they say this with Lowe's, but Home Depot. That's kind of a flip, like kind of a thing. They pretty much sell similar stuff, right? So getting into other things, it says, despite the recent comeback in the S&P 500 is down 15% for the year, because last week we had a little bit of a gain here. We had a handful of days where, the stock market went up, not up as much by it went down. So it's down 15% for the year, while the NASDAQ is down 24% for the year. It says we really don't have a catalyst that has occurred that would be a meaningful uptick in this market. So I think you're going to continue to see the seesaw of emotions throughout this market, said Megan Hornman, Chief Investment Officer at Verdence Capital Advisors. And basically, yeah, you don't have a catalyst. You don't have all of a sudden dropping in interest rates down to zero or something like that. You don't have these, oh my gosh, lowering tax rates, income tax rates, and corporate tax rates to 0% or something, that would be such exciting and great news for the economy. Similar in the opposite fashion, is like the COVID pandemic was bad for the economy and crashed the economy almost immediately. Within a very short period of time, it just completely pummeled the economy. And very similarly, we don't have the opposite going on, where they say stimmy checks, things like that, because, once you get those stimmy checks out, obviously we can see that it does increase inflation. Those have had an impact. More people spending at velocity, the money that's coming in. So if there was ever any kind of precursor or premonition of what would happen if we did get UBI in the United States, we may be seeing it right now with these rising prices everywhere. So that being said, it says gas prices have steadily marched higher. The national average for gas is $4.56. Prices are 48 cents more than a month ago and $1.52 more than last year. That is humongous on that small of an amount. That's over 25%. That is insane. And let's see, every single state is now averaging above $4 a gallon, with California statewide averages across $6 a gallon. That is huge. That goes right into your pocketbook. That comes right out of your pocketbook. So the $1.52 that you are spending times, let's say it's 100 gallons of gas that you're consuming every month, because let's say you have a 25-gallon tank, 100 gallons a month, that's $152 that just is not being spent anymore across millions of people in the country. And that's not to say that some people don't drive more than others. I know with Uber and such, there's a lot more driving probably going on with vehicles. Stocks and other assets have been pressured by inflation, with the Federal Reserve's attempt to tamp down price increases through rate hikes, which has led to concerns about a potential recession. Jerome Powell said that there won't be any hesitation about raising rates until inflation's under control. Good luck with that. This is coming from the same guy that said that inflation was transitory when it was clearly obvious that it was not going to be transitory. And the fact that he is trying to get rates to 2 to 2.5%, which is where it was, just for them to maintain a 2% inflation amount, is ridiculous. And I don't think why you're waiting and only raising it 0.5% if you think that it's truly what's necessary to get us to have reduced inflation, or really what we need is deflation to drive the prices back down. Because if we just could maintain 2% inflation, well, if we went up prices 10% and then we just keep, their target price is what they want is 2% inflation. Well, that means that the prices are never going down. If they continue to want to target 2% inflation every year, they just continue to rise. Why they want to do that? It hurts the poor. I don't understand. It really is like a tax on most poor people, because, people that have more money can afford 2% increases and stuff, but poor people can't. And we all know wages are not going up for minimum wage and poorer people by more than 2% in all likelihood. It's just not happening. I mean, look at how long it took for minimum wage to be increased from $7 an hour to $15 in the next 5 years or so. It's just these things are not tracking along that way. So that being said, there is a big difference. They go on to say here, there is a big difference between corrections in the equity markets and outright bear markets. The difference being bear markets are almost always sort of associated with some kind of recessionary macro environment, or at least inevitable in the forecast horizon over the next 12 months. For us, we sit here, we just don't see that. Okay, so they don't see they don't see the recession coming. They are obviously optimistic. I don't see how they cannot see that. I don't see why they can't see that. It doesn't make much sense to me. But those are that is the narrative they're currently pushing. And maybe it's just because they don't think that we're smart enough or intelligent enough to handle the news. So that being said, I hope you enjoyed it. Like, subscribe, do all that kind of stuff. If you enjoyed it, you want to hear me talk more about current events. I had some other videos I did about GDP and stuff like that. So if that's something you're interested in, go check out one of those videos. I'm not techie enough to do the whole flip the things up here and there, and I really don't have a desire to do it either. So if you like the video, subscribe. That's cool. Well, that kind of gives me an indication, or like the video at least. So it gives me an indication if that's the kind of stuff you guys like to hear, and it gives me a better judge of what I'm saying and doing, so I can understand more. So appreciate it. Hope you guys enjoy the rest of your day. Try to knock out some more stuff for videos and such today. So have a good one.